If you're shopping for a mortgage right now and the only thing you're focused on is getting the lowest rate possible, that could be the exact reason you end up with the wrong mortgage. A mortgage with a lower rate can sometimes put you in a worse financial position than the one with a slightly higher rate. Most people have been trained to think that mortgage shopping is one big race to the bottom. Who has the cheapest rate, whose rate is 0.001% lower, but that is not how smart mortgage decisions are made. You do not live inside of an interest rate. You live inside a monthly payment. You live inside cash flow. You live inside the stress level every single month when the payment comes out of your account. And if the mortgage you choose looks amazing on paper but locks you into a big product or punishes you if plans change, then that is not the right mortgage for you. My name is Ushindi Mutabazi. I'm a mortgage associate here in Alberta, and I specialize in helping self-employed Albertans qualify for a mortgage without waiting for the 2-year income averages, paying more in taxes, or changing the way that they run their business. In this video, I'm going to show you why your mortgage rate is not the most important number when buying a home. I'm going to go over what you should be prioritizing instead, and go over how focusing on the wrong thing can quietly cost you way more money, way more stress, and honestly way more options than you even realize. And make sure you stay until the end, because I'm even going to give you a simple way to tell whether or not a mortgage is actually for you. Let's start with the biggest mindset shift first. The goal is not to get the lowest rate. The goal is to get the right mortgage for your specific life. If I offered you two options right now, option A has the lowest rate, but the payments are still a little bit too tight for your lifestyle. You have less flexibility, and if you need to make a change later on, it will cost you thousands of dollars. Or you can go with option B. You have a slightly higher rate, but the payments actually fit your lifestyle a little bit more comfortably. The mortgage actually matches your timeline, and it gives you more room if life changes in a couple of years. We're both thinking the same thing. It's obvious, but every single day, people are still going with option A. And that's because in their head, the rate feels like a score. It feels like a number that tells you whether you won or you lost. But here's the thing I need you to understand. You do not win by getting the lowest rate. You win by getting a mortgage that actually helps you achieve the outcome you want. So what do you actually prioritize? Well, that's up to you. But if I was giving you advice, the first thing I would suggest you prioritize would be your monthly payment. I'm not sure about you, but my monthly payments are the numbers that actually have the ability to affect the way I breathe. When I'm doing my budget every single month, I'm not writing down my rates. I'm writing down my monthly payments. That is the number that decides what mood you're in, especially if you're self-employed. Your income might be strong over the year, but your cash flow is not always perfectly smooth every single month. Some months are amazing, some months are slower, and some months you might get paid late. So if you choose a mortgage just because it has the sexiest rate, you might end up with monthly payments that are way too aggressive for your current lifestyle. This video is sponsored by myself. If you're looking to buy a home in the next 6 months, or just want some clarity on your current position and where you stand, click the first link in the description and complete my 3-minute mortgage readiness quiz. It's completely customized, and once you complete that quiz, I will personally record you a custom video within 24 hours, breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline and your goals. This is not automated, it's me doing the work. Also, make sure to follow me on Instagram at It's Ushindi for more self-employed mortgage advice, or if you have any questions and just want to chat, a link for that will be in the description as well. Let's get back to the video. The second thing I would suggest you prioritize is your end goal. Most buyers get way too short-sighted. They think, what's the rate, before they even consider, what am I actually trying to do here? Are you buying a starter home that you're likely going to outgrow in 2 to 3 years? Are you buying something you plan to keep for the next 10 years? Will you upgrade once your business starts growing, or will you downgrade if it slows down? You need to sit down either by yourself or with your partner or with your family, and you need to decide whether you're buying your for now home or your forever home, because those are two completely different strategies. If there's a decent chance you might sell, refinance, or even make a change before the term is over, then flexibility matters a lot, because getting obsessed with the lowest rate possible can pull you into a mortgage that looks good today but becomes painfully expensive the second life changes. And life changes all the time. People move, people separate, people have kids, business grows, business slows down. So if you build your mortgage around the rate and ignore how likely your plans are to change, then you may be creating a mess that your future self yourself will hate you for. That brings me to the third thing that I would suggest you prioritize, and that is flexibility. Your flexibility is one of the most underrated part of a mortgage because flexibility does not look exciting on a piece of paper. And on top of that, you don't really hear your friends bragging about their flexibility. What they talk about is the rate they just got. But that's because they're not as smart as you, because flexibility is what protects you when real life happens. So before you choose a mortgage, you need to be asking yourself, can I make an extra payment without getting penalized? Can I increase my payments later if my income improves? Can I move this mortgage to a new property? What happens if I need to break the mortgage early? And what happens if my plans change faster than expected? These questions matter a lot. You might not see it now, but I guarantee your future self will thank you for it in a couple of years. And the last thing that I would suggest you prioritize, especially if you're self-employed, is the lender. Sometimes the best mortgage is the one with the lender that actually understands your file properly. One lender may look at your income one way, another lender may look at it a totally different way. So if you're only chasing the lowest rate possible without even thinking about the approval strategy and your approval odds, then you can end up talking with the wrong lender, structuring the deal the wrong way, or aiming for a product that was never actually the best fit for how your income is presented and structured. When getting a mortgage, you should be asking yourself, who is the right lender for my income story? What structure gets me approved comfortably, and what lender supports the next stage of my plan? This is a completely different conversation than what is the best rate. And in my opinion, it's a much smarter conversation. So here is the big takeaway that I hope you'll leave with from this video. A low rate is not a strategy, it's a feature. And sometimes it is a great feature, but it is still just one piece of the puzzle. The right mortgage is the one that fits your monthly payments, it fits your timeline, it fits your approval strategy, and fits the actual goal behind why you're buying this home in the first place. If you're looking to buy a home in the next 6 months, then click the link in the description and complete my 3-minute mortgage readiness quiz. Once you complete that quiz, I will personally record you a video within 24 hours breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline and your goals. Also, make sure to follow me on Instagram at It's Ushindi for more self-employed mortgage advice. Or if you have any questions and just want to talk, make sure to follow me on there as well. The link is in the description.